So hello, welcome to this webinar presentation of the Innovation in Retail Banking study for 2013. My name is Michael Pearson. I'm an Efma strategic advisor and I was responsible for putting together the study. So as an introduction, we should say that this is the fifth annual study of retail banking innovation conducted by Efma in association with Infosys, Infosys Finacle. This year we had over 150 banks from around the world participating in the research, which was both an online survey and also interviews. Our focus this year was on how to overcome barriers to innovation, and we also measured the deployment of various channel innovations as part of this survey. So the presentation that I will go through now is in 4 sections. The first section is some general background on innovation, strategy and performance. Then we'll be looking at the barriers to innovation and how banks can overcome those barriers. Then we have, thirdly, a section on the digital channel innovations and how those are being deployed. And finally, we'll have a few innovation case examples to give you some lessons about how to do innovation. So starting with innovation strategy and performance, it's very difficult to find any research which provides a direct link between companies' innovation performance and their overall success. But many successful business leaders claim that innovation is essential for growth and value creation, particularly in the longer term. And this quote is from A.G. Lafley, who is the chairman and CEO of Procter & Gamble. And he says, as I've looked at a number of industries, virtually all the value gets created by innovation. At our company, all of our revenue growth was either organic innovation or it was through acquisition. And acquisition was a platform for future innovation. So clearly a successful businessman who's a strong supporter of innovation. And on the next slide, we have a quote from an academic researcher who's an expert in the field of growth and innovation from Colombia Business School. Rita Gunther McGrath says that growth outliers do a tremendous amount of experimentation and innovation. They develop and deploy new technologies, move into new markets, explore new business models, and even open up new industries. They take on acquisitions and aggressively seek input from people and organizations quite unlike their own. So, moving on. What we found from the study this year is a couple of positive messages. One is that banks believe that their innovation level is increasing. So on the left-hand chart you can see 76% of banks felt that they were more innovative this year than they were last year, and only 6% felt that they were less innovative. And on the right-hand side you can see that banks are also investing more in innovation. So 70% of banks said they were investing more in innovation in 2013 than in the previous year, and only 5% of banks said they were investing less. And on the next slide we can see that banks are also increasingly adopting an innovation strategy, which we think is an important element to consider. Because if you are investing without a strategy, then it's likely that you are going to be unsuccessful. In 2009, only 37% of banks said that they had an innovation strategy, whereas in 2013, 60% of banks said that they had some kind of innovation strategy, which should include a series of objectives, your processes for innovation, your metrics for success, this kind of thing. Now, moving on to the next slide, we ask banks every year whether they are concerned about the threat of disruptive innovation, and that concern level remains quite high. 4 examples here illustrate where banks see those threats coming from. So in the top left-hand corner, the biggest threat is seen from e-commerce companies like Amazon. Amazon launched recently this Amazon coin, which is a kind of payment mechanism for making payments on the Amazon websites. This is clearly just a test of something they want to look at, but in the longer term, Amazon could be a significant competitor in the financial services space. In the top right-hand corner, we have the telcos. This example, ISIS, is a consortium of telcos in North America who have launched a mobile wallet. And clearly many banks feel that telcos are a significant threat to their business. In the bottom right-hand corner, we have a startup, and we're continuing to see startups who enter with new business models for core banking solutions. This one, called NAB, is from the Netherlands and is backed by an insurance company called Aegon. And in the bottom left-hand corner, another area of threat is from retailers. This bank in the UK has launched recently from Marks and Spencer, M&S, and they are opening branches in M&S retail stores across the country, and will be a threat to the banks as it develops. So now we can move into our second section, which is about overcoming barriers to innovation. And first of all, what are those barriers? And we asked banks to rank these 6 barriers, and we found that for large and medium-sized banks, well, for all sizes of banks, IT systems were the #1 barrier, and for large and medium-sized banks, culture was the second most significant barrier to innovation, followed by organisation silos. This is where there's some difference with smaller banks who find that culture and organisation silos are a little bit less of a significant barrier than they are for large or medium banks. So talking about IT systems first of all, one of the problems with IT systems, particularly in the larger and medium-sized banks, is that they are often silo-based. And silo-based IT systems, as you can see from this chart, have a significant impact on time to market and cost of innovation. So these are the 2 most important areas on a scale of 1 to 7, where 1 is a very low impact and 7 is a very high impact. You can see that silo-based IT systems affect time to market and cost of innovation the most. And in terms of time to market, on the next slide, we can see that the time to market for a new offer, very broadly defined, is on average about 12 months for large banks, whereas for small banks it's only around 6 months. So you can see the impact that IT systems often have on time to market for new offers. That could be new products or new services. So we asked banks whether having enterprise-wide banking systems, which is the chart on the left-hand side, so banking systems like in payments or in account origination, which would work across the enterprise rather than in silos, whether this could improve innovation execution. And more than 3/4 of banks said that it would improve innovation execution. Now, of course, the problem with implementing new banking systems in particularly larger banks is the disruption that can cause and the risk that is involved in that. And we often find that banks who are in the middle of banking system replacement do have to cut back on their innovation activities during that time period. So we asked banks whether componentized deployment of banking systems would be a benefit to their innovation execution. And the majority of banks said that it would. So that's deployment of banking systems in components as opposed to in a big bang process. Now there are a number of other factors which could improve innovation capability, and in the area of product, this for example would be the ability to personalize product offers or the ability to launch products in collaboration with other companies. So these are two areas where if banks could improve their capabilities, it would improve their innovation capability overall. In terms of channel, improving the unified customer experience across channels and improving multi-channel integration in terms of the back office would be two factors that would improve the overall innovation capability. And then finally, in the area of customer, improving customer insight and improving the single customer view would also have an important impact on a bank's innovation capability. Now we mentioned earlier that particularly for large and medium-sized banks, culture is an important factor. And many banks are trying to develop open innovation techniques, which is one way of getting around some of the cultural barriers within the organization. And some of those techniques are listed here, for example, partnering with IT companies or other suppliers. And then we've measured the effectiveness of these techniques on a scale of 1 to 7. So you can see that partnering with IT companies is coming out as being the most effective of these 5 techniques that we surveyed, and the least effective, equal least effective, are competitions for non-staff, investment in startups, relationships with academic institutions. Now it's interesting because we know banks who are using these techniques quite effectively, so it's clear that many banks who have tried some of these techniques have not really got to grips with them yet to really get the most from them. So we're not saying don't use them, but clearly that there needs to be progress in terms of getting the most out of these kinds of open innovation techniques. So a good example of a corporate venturing approach investing in startups is BBVA Ventures, which has set up a $100 million fund targeting startups with the potential to transform financial services. And this is based in Silicon Valley. Now for large tech companies, this is a very, very common practice, and you'll find all the large tech companies and probably the large pharmaceutical companies have these kinds of funds. So there's no reason why the large banks and medium-sized banks should not be thinking about this kind of activity for understanding what developments are taking place in the market, learning from new business models and anticipating changes So we're now going to look at some digital channel innovations, and we surveyed a total of 10 digital channel innovations, and we found that on average small banks had implemented or deployed 1.2 out of these 10, whereas the large banks had deployed 2.8 out of these 10 innovations, which suggests that large banks in general are being more innovative, but there is still quite a significant distance for them to develop, with only 2.8 out of 10 being deployed. And this covered mobile payments, mobile banking innovations, as well as some online innovations which are listed on the right-hand side. Now I'm going to talk a little bit more about a couple of these. And first of all, digital-only banking. One is, this is an area which we're starting to see some developments in, and Hello Bank was launched earlier this year by BNP Paribas in Belgium and a couple of other countries in Europe. And these banks are designed specifically for the mobile and online experience, so quite different from a full-service bank that has just launched an online service. These banks are designed for digital banking. Now 20% of banks, as you can see on the left-hand side, have said that they have some kind of digital-only banking offer. And 21% of banks say they have a digital-only banking offer planned. But 56% of banks say they have no plans for digital-only banking. And so this is clearly an area where there are some mixed views in terms of strategy. So some banks would like to have a digital-only bank, which is very focused, but other banks do not want to go down that route at the moment. Now on the next slide we look at mobile wallets, which is developing. Again, something like 20% of banks have some kind of basic mobile wallet already deployed, but 56% of banks are planning to deploy mobile wallets. So in this case, this is a significant development which we expect over the next 2 to 3 years. An example being a recent venture set up in Spain by CaixaBank, Santander and Telefonica, which will include the development of mobile wallets. And on the next slide, we look at location-based marketing. So this is making use of mobile technologies, geolocation technologies, to deliver offers to customers as they move around, as they make purchases. And we currently think that just under 20% of banks have some kind of location-based marketing capability. But the 51% of banks have this in their plan, so expect to see over the next 2 to 3 years a significant increase in the number of location-based marketing services. And finally, in terms of digital channel developments that we've been looking at, gamification has been a hot topic, although we currently only see less than 10% of banks who have tried some sort of gamification exercise. There are a significant number of banks who are working on gamification, although the majority of banks, according to our survey, 56% of banks do not currently have plans for gamification. The BBVA game is a good example of a successful gamification initiative, and this was presented at the Efma Innovation Conference in 2013 in Barcelona. So in my final section, I'm going to talk briefly about some innovation case studies. And there are a number of banks who presented at the Efma Innovation Conference in Barcelona. And I've listed 3 here who talked about how they went about innovation and provide some interesting contrasting examples. So FNB from South Africa is quite well known, and their innovation strategy is based on a competition for employees with some quite significant prizes. And this is not always popular with banks that we talk to in terms of giving prizes to employees for innovation. But for FNB, it's worked extremely well. It's been part of a long-term commitment, very much driven by the CEO, who's very visible in the process of selecting the winners and rewarding the winners. And this has really worked well for FNB in making it one of the most innovative banks in the South African market and globally. The second example is TEB from Turkey, which is a subsidiary of BNP Paribas, although it also has some local shareholders as well. And TEB is a medium-sized bank which has been very entrepreneurial, and the entrepreneurial culture is an important element of the whole innovation approach. They've used multiple innovation activities, particularly open innovation, working with competitions for non-staff. They have an innovation center where they run lots of events for staff to come and work on innovation projects. And they've launched a whole series of innovations over the last 10 years, which have really helped the bank to grow in the Turkish market. And then finally, UniCredit from Italy is a good example from a much larger bank of how to coordinate innovation across a multi-country matrix organization and the coordination mechanisms that are required to make that an effective program. So UniCredit has really thought this through and put in place the mechanisms to do that. Interestingly, they also have an R&D team, so they're actually investing in pure R&D in the retail banking space, which is quite rare in financial services. And then finally, on the next slide, a good example from an emerging market, Colombia, where there is a bank called Davivienda, which has developed a mobile money platform. In fact, a platform which has become the 3rd largest mobile money platform globally. And this is called Davi Plata. But it's not just this innovation, Davi Plata, that's interesting. It's the approach that Davivienda takes, and this has been a good case study in terms of a very structured approach to training their employees in innovation techniques and running innovation programs in a structured way across the bank, and they're allocating budget specifically for innovation projects. So this bank has really taken innovations seriously in the Colombian market and is showing signs of benefiting from that. So those are the case examples, and briefly in conclusion to the study for this year, the innovation good news is that performance is improving, investment is increasing, and more banks tell us that they have an innovation strategy. We find that the key challenges when trying to improve innovation performance are typically to do with IT systems and culture. And that's particularly so for the large and medium-sized banks. Now, some banks are able to work around their IT systems issues and still be innovative. But ultimately, we believe that simplification and working across silos is key in the long term for being innovative. And then finally, some banks have, as we've seen, have been able to address innovation culture issues in banking and are actively using successfully open innovation techniques. But clearly also many banks still have quite a lot to learn in this space. So that's the conclusion of our study for innovation in retail banking for 2013, and thank you for listening to the presentation.